The broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to the Morning Bell for Yellow Tunnel. I am Keith Harwood. Hope you all had a wonderful evening last night. Before we get started, normal disclosures: options involve substantial risk and are not suitable for all investors. Tradespoon and the presenter of this video, which is Keith Harwood, are not investment advisors, not registered with the SEC, not registered with FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for information and education purposes only and should not be considered trade advice. Please also remember that the presenter of this video, Keith Harwood, or the team at Tradespoon may have a financial interest in the securities presented and the trade ideas, so please keep that in mind as you evaluate trade ideas for your own personal investment and trading portfolios. Good morning, Fred. Good morning, everybody. I hope you've all had a wonderful evening and are continuing to have some good trading success. We got some interesting movers today, of course. Spirit Airlines looks like it's toast. So setting up for bankruptcy possibly in the next couple weeks, down 60-ish%, I think last I saw. So that looks like it's going to be heading to zero. And then I actually want to look at like Frontier and some of the other names that were in that space, Frontier in particular, since there was speculation that Frontier may look to acquire Spirit. We might be setting up something there from more of a stock perspective rather than an options perspective, but nonetheless, that could be an interesting trade off of this announcement in Spirit. Otherwise, generally speaking, we've got some decent behavior for the market to set up the next bull move. 10-year yields need to be considered. That could trigger a flight from the market response if 10-year yields get higher. As we currently sit and as we're doing today, a little pullback in the yield that allows for the market to continue to try to fight for that new high. We will see how that behaves. I don't expect to see a lot of fight out of a name that's getting ready for bankruptcy in Spirit Airlines. That would be a flight, which they will probably continue to get to do once they've done their bankruptcy work. I think back to like Chesapeake Energy years ago. They went bankrupt, but they restructured, brand new stock. Just the equity that's out there right now likely goes to zero. And I think we'll see that continue to fall even after the initial drop today as we head into that bankruptcy announcement. So kind of a stay away, but again, maybe there's something there for like Frontier Airlines on the trading side of things as people stop thinking about them taking on that debt load and the problems of Spirit Airlines. Again, as always, we're all looking about compounding investment. We had the big move last week from the election. We're continuing to get some rotation, continuing to get some reallocation in the market. And so looking for ways to compound investment for these smaller moves that should be coming up in the nearer term, but maybe more predictable moves in the near term is key. Probability of success, again, upside for now for the market. Bull side looks good for the end of the year. Looking for that potential input that could change that philosophy, but for now, I still believe that that is going to be driven by 10-year yields, and we're not seeing that create a problem yet. So, and I stress yet, something could change in the data that shifts 10-year yields a little bit higher and starts creating concerns for the broad investment community. But for now, the probability of success still looks to the upside. The return on capital is expected to be less than what we saw from the election, but you'll still have individual names move, particularly as we wrap up some of these earnings. You look at like Spotify had a really nice day. Kava is having a really nice morning. Then we got a couple of the downside too, if I remember correctly. CyberArk is like down small. But generally speaking, we can have ups or downs on it. There are a few earnings this afternoon and tomorrow morning that actually look pretty interesting from both an options perspective and an implied volatility perspective. So I'll take a look at those this morning as well. Cisco this afternoon, Disney, JD, Advanced Auto Parts, and Billy tomorrow morning. So if there's other stocks that you guys are interested in and want to look at, let me know. We can talk through some of those other names. No trend change yet. We'll see. Technically, we had 2 down days in the S&P, but we're up a little bit today, and it wasn't much magnitude. So I don't necessarily consider that a trend change. It's buying into the light weakness If it starts to get more aggressive, that will shift the philosophy for a couple of days. But I still think that there's going to be people looking for opportunities to buy the dip on the whole. We've got a natural need and desire for some profit taking on the short-term traders investment community, likely not going to put much of a ceiling on the market, as they would have to pay that tax bill in April if they sell today, versus if you sell in January, you can pay the tax bill later. So barring a fundamental input that really shifts them from thinking about the potential loss on the trade as opposed to the potential taxes on booking the win, I think that's something to keep in mind here. And as the VIX is dropping, we've still got more time, so we can add time at a cheaper. Kind of said a lot of this already. I'm not chase trading. That's pretty normal. Revenge trading. I mean, the standard revenge trade right now would be to try to buy, save on the drop. I don't think that's a good use of my mental or actual capital. Mental capital, and that I'll be fighting against a potential big losing battle. And sure, maybe there's an outside chance that they figure something out without bankruptcy and the stock doubles, but I'd rather look for opportunities in the options market that can double on a stock that has a lot more safe setup than betting on the outlier recovery in Spirit Airlines. So probably not a good use of my capital, really either direction. High probability of the downside, but there's enough trades out there that I can avoid trying to play the event of the bankruptcy itself. All right. But yeah, flexibility is key. That's always present there. Keep in mind that we've got NVIDIA earnings next week. So with NVIDIA earnings next week, that could have a shift in the semiconductor and tech investment flow. I'm not sure it'll have a big trigger for tech investment prior to the NVIDIA earnings, but once that comes out, if NVIDIA has stellar earnings, that could start putting semiconductors back on the map a bit, start putting some leadership there. So we've got to watch for that next week, but heading into that, it's just about looking at all the other sectors out there, the financials, the regional banks, that have been performing well, the industrials, consumer discretionary, which, I mean, it's Amazon, or sorry, not Amazon. Amazon, Tesla. Sorry, that's Amazon, but you see Tesla has been performing really well. That's pulling back a little bit, but that's sort of natural given the magnitude of the move it had off of earnings. We'll take a look at kind of all these names for potential setups. With a high focus on really the names that have gotten some consolidation, because those are the names that can then set up a technical formation for either a breakout or a retracement that could create a buying opportunity on like a bull flag. So I mentioned the 10-year yield. You see here that we've got the 10-year yield down a little bit today, down to 4.37%. So been bumping against this 4.5 level. I think it's actually 4.51. No, the high was 4.49. So there you go. The high was 4.49. Getting up above 4.5 starts to set us up for some pretty clear space to the upside. Higher interest rates start to get people thinking about that safe investment in bonds, giving a good yield. But at the end of the day, I mean, over the last 12 months, we've had a 25% return in S&Ps. So maybe people diminish that a little bit. At the same point, higher interest rates can create a rationale for reducing equity portfolios, and that may be the only thing I can see that could really give a true slowing of this market rally. So it's something to watch. It's something to be concerned with if it continues. But today's down move in the 10-year yield makes for a lot more comfort, I think, for the bull overall. Bitcoin. Always got to look at the $1 million question. People have been talking about this possibility of what happens if Bitcoin continues. Will it reach that $1 million milestone in 2025? That's 11 times the current price. I think let's try to focus on whether or not it's going to hit $100,000 first, and then we can start talking about $1 million. Or we could start talking about 150,000, and then we could talk about 200,000. And, obviously we've had a very nice run in Bitcoin here since September. Really, let's go to the August lows of 50,000. We're getting close to doubling in 3 months. It's a volatile space. It creates opportunities in some of the equity markets. We'll take a look at Marathon, which just had earnings, Riot, Coinbase, because I think those are some of the names that are going to have some really big potential returns if Bitcoin can stay high and Bitcoin can stay exciting and Bitcoin can stay interesting to the marketplace. If people are buying into crypto, then that creates more volume and it creates a better environment for crypto-focused companies. So we'll certainly take a look at those as a result. And then VIX, since I don't quite have market open yet, I'm doing it on the bar chart before I switch to live ball. So you can see the VIX chilling here right near the lows, and SDAX, the skew index. There it comes with a nice little pop-up ad, sort of bouncing off the lows. Looks like the SKUDEX has a little bit more downside, but what it tells me is that even though the implied volatility is falling, it's people selling at the money options, expecting consolidation, but they're still buying some puts. So they are buying protection. It looks back to the mode of selling put spreads when the VIX is down and SKUDEX is up. When both are down, it implies people are just selling out some out of the money puts. And when both are up, they're outright buying puts. All right. So with right now, with SKUDEX bouncing up a little bit, while the VIX has been stable or falling, it looks more like people are hedging some of their risk by buying puts and or selling put spreads. So having defined risk, I'm willing to buy the dip mentality. That I'm willing to buy the dip mentality really is just selling a downside put spread. I collect the premium if the market doesn't dip. And if it does dip, I get naturally put into a long position in the stock. So with a defined risk to the downside, where if we do collapse because 10-year yields jump to 4.6, then I can get out of my position and only lose what my max loss from that put spread at the worst case scenario. So overall, the hedgers are buying puts, it seems like, and the buy the dip market is selling put spreads. And that's what's causing SKUDEX to come back up a little bit here. Let's go to SPY, and we are past the open now. You can see we are right inside yesterday's range. A very minimal move so far today. Nothing too major. Just kind of chilling here at 597.40 and change. The hello from Tuesday was 597. Staying above that, I think, helps a little bit on the bull case. But really what we're looking for now for the bull is a new high. So the high is $600.17. It was just below 600 on Friday. Monday, we got above. We get above that high. That could start to put some momentum and some power back in the bull's control. It tells me that the market buyers are getting more aggressive. Whether that happens today, tomorrow, or not till next week is yet to be seen. But for now, what we are seeing is clear that the market wants to try to push to new highs, but people, I think, are afraid to be the ones to buy into that new high. People want to buy dips, and the longer we go without a dip, they start to get impatient and start to get more aggressive buying market level as opposed to waiting for a drop. Because if I was expecting to wait for 590 and now saying, well, maybe I'll buy in at 595, and we're still sitting at 597, it's close enough to 595. I might as well just buy here because I don't want to miss out on the move to 610. So that's sort of the general, I think, psychology behind some of this consolidation near the highs is as long as we're not dipping, eventually we do start to see impatience in those looking to buy the dip, saying, never mind, I'll just buy the market. Okay. Already did VIX and SKUDEX, so let's go to Qs. As I mentioned before, Qs have been a little bit of an underperformer relative to the broad market, and that's widely driven by SMH, having been a very choppy, not bullish setup overall over the last, call it, have not retested those. The market, tech, S&Ps, small caps, all to new highs. SMH is kind of in this grinding out, chopping, slightly bullish trend. So very slight, not aggressive. And I usually look at semiconductors as a leading indicator for tech. So their underperformance is a red flag. But like I said, if NVIDIA comes out with good earnings and starts the commentary back into semiconductors and tech, then maybe that could start to get this leadership status back in place for semiconductors. So I've got to keep watching this, keep watching NVIDIA, keep watching the other names. I mean, we see like AMD unchanged, but pressing near these lows, looking like it could break down to a new low if semiconductors actually get weak. And again, NVIDIA pressing highs ahead of earnings. Market seems to be pricing in an expectation that NVIDIA will have positive earnings. So if NVIDIA does come out with bearish earnings, I will note, that could actually be another big flag for the tech market and the market on the whole. Because if NVIDIA is weak and that drags down all the semiconductors, as the correlations go and people start to look to get out of semiconductors and into some other into other sectors such as financials and energies and industrials, at some point, sometimes we see that people just sell the one thing and they don't worry about the buying side until after they've done their selling part. So that could create a little liquidation in the short term. So that's my couple of inputs right now that I'm watching for the market, NVIDIA next week and the 10-year yield. All right. We finally moved to small caps, and small caps are pretty good, right? A little weak yesterday relative to the rest of the market, but we had made our new high on Monday. Today's only Wednesday. So the new high was made on Monday. Yesterday had a little bit weaker than the rest of the market, with the profit taking in a little bit of the closing out some of the Trump trade post-election. It doesn't mean bearish, it just means profit taking for the short-term trader. If we continue to see this start to firm again and start to regain leadership, it's going to have to be driven by by financials, sitting near the highs, didn't really look weak yesterday, and regional banks sitting near the highs, didn't look too weak yesterday. So we're going to see how this plays out, but I expect to see financials to be some of the first to break out as we make a new high. So in order to make that new high, financials right now may be the leadership candidate for the market. And speaking of which, why don't we take a look at a couple of the financials we've been watching for aggressive power trade. We had Stanley, which looks a little bit better on the short-term setup as it's testing the highs. JP Morgan had a significant rally on the 6th and then a significant pullback. That seems to be forming really good support here, though, with a bull pennant here ready to break out to the upside. We'll see if that continues, but as we get above levels like 242, it starts to give me real expectations of retesting the highs at 248 and maybe further. If Morgan Stanley breaks out to a new high, or Wells Fargo pressing against the highs, or Goldman, which has been looking like one of the best, makes a new high, I think that predicts pretty powerful movement in the rest of the financials. So as we see the first few check the box of new high, watch for the others to potentially follow. RF actually may have had a new high this morning. Some of the regional banks really getting close as well. Zion, Key a little bit weaker. So yeah, I mean, all in all, we're seeing some pretty strong performance out of a lot of these. I'd have to look up what happened with New York Community Bank. They changed their symbol to FLG. Okay. So that's just chopping in the middle. I do wonder when that will participate, if ever. With financials continuing to rally, this is one that had been beaten down a little over, what was that, about 9 months ago? 10 months ago, 10 months ago, back at the end of January. It hasn't been able to break out and start up that bullish trend. With the rest of the financials doing well, I wonder if there's anything that can get it going. But right now, it doesn't seem like the market cares about New York Community Bank. So something to keep on my watch, breaking out of this 10 to 12.40 range that it's had for the last few months. That could be an interesting way to play later in the game on the financial sector for a short-term trade. Let's run through and before I do it, I'll just pull up Sage so you can see it's down 55% today. Little bit of buyers, probably some short-term just profit taking from the short position that got to sell into the last couple of days of relative bullishness. But it's halted right now. I'm not sure how long it'll stay halted. We can take a look back at it near the end of the session, see if it unhalts and where it goes from there. But it's in pretty dire shape. The earnings from last night, we had, oops, that's not it, Spotify. 460, 40 bucks, 9.5%. And you can see again, right here in line with the expectations. The norm is about 10.5 to 11%. We're just under that right now at 10%. We're right in line with what the pre-market was pricing in. That's why we check these numbers, because frankly, we see it more often than not that those numbers come in line in terms of the magnitude of the move. Kava was a bigger move than expected. Normally about half this, so we did get a 2 standard deviation move in Kava group. Fast casual Mediterranean. Whoops, wrong one, stock chart. There you go. So you can see up to a new high here. There's not a huge pin type strike. I mean, lots of trading here on the 180s. I don't know what to think about that right now. That seems pretty aggressive given that we've already done a 2 standard deviation move on earnings. But if people like it, maybe they're thinking about that potential for even further upside there. So something to watch, but for me, nothing to trade in Kava today. SWKS, weak on earnings. So Skyworks is not helping. Their wireless networking services, they're weak. They had a bad reaction to last earnings that dragged them down from 115 all the way to 96, and then we bounced back, then dragged down, and now going down further. The company does not look good right now. It's very much a stay away for the bull for now. But I think if we get into a bounce back up into this 87 range, I can look to establish a short position. If it just continues to really fits what I'm looking for in my normal trading. But if we get a bounce back and in that time period start to see this implied volatility drop towards 30%, that's where I start to look a little more excitedly at the potential for a bearish move. So I want to see some bears taking the profits and let new bears like me get into the game at that point. So that's it for that earnings. And then the last one that I had been looking at yesterday, CyberArk. Ended up a little bit smaller. So yesterday, when I first looked at it in the morning, it was trading 290, and I was thinking that 310 and 270 looked like pretty good targets. By the close, we were already trading 300, so it didn't look like a good potential setup at that point. And you can see that the move is muted because basically we did half of the bullish move during the trading session yesterday by jumping from 290 to 300. We no longer needed to get all the way to 320 today. We already moved 3.5%. Just during the trading session. 310, not a huge open interest in anything in this stock. There is a little bit more at 320, but it's hard to call a pin yet in this, given that it's not very liquid. But I just want to note that 310, this previous high, seems to be holding for now. So we'll see how that behaves here in the next few hours throughout the day. And then we'll see if there's anything worthy of trading there, but it's not the most liquid. So for me, it may be a little bit less exciting. CCJ is now down on the day. It peaked at 56. What's uranium got? Uranium pulling back after a little bit of a bullish start. So that's all still okay. As long as uranium stays green, CCJ may find some buyers here during the day. Path. So I've got the 13 calls that are expiring this week. We did actually open just below, just above, but then dipped just below yesterday's low. So this is on kind of high alert for me. If we get down and make a new low on the session, I'll just take my profits and run before this starts to liquidate down back below 13. But for now, the bull is buying into AI names. You can see AI slightly firm today, up 2%, and looking like it's getting close to clearing out some resistance here for a move potentially above 30. Maybe not this week, but maybe next week. So I'll keep an eye on those continually here. Altria just continues to bounce around here. Philip Morris is recovering now. Okay, so Philip Morris was looking a little weak pre-market, but it bounced back. Might be a little bit with the TLT rise, the 10-year yield falling, utilities getting a little bit of buying momentum here. So, like I said, that's a short leash trade for me at this point. I gotta just keep watching for whether I just pitch it and move to a new trade, since it's not been working here since initially looking like it was ready to chase Philip Morris lower. But for now, not happening. Light bounces in gold and silver, nothing really to write home about. Maybe a little consolidation here after the big drop for a couple of days. Kind of disinterested in the gold and silver trade, like the staying below 247 in gold and staying below 29.60 in silver looks like the bet. So it's like a credit call spread out of the money or a in the money debit put spread. And it kind of fits with what I've got right now with gold. It's the 252, 247 put spread. And I think just staying with that for now and let the premium erode until we start to get a better technical setup for the next break. Oh gosh, PLTR. Another new high. Every time I think that it may be done, it just keeps going. Tread lightly. So here's my biggest concern with it. It's got an 85 RSI right now, and it's just not sustainable in the long term. Now, it doesn't mean that we're not going to keep going up over time, but price has gotten way ahead of time here. So my concern with this is less that it's maybe can be bullish, but how much more upside can we continue to pour into this absent new news? How do we feed the bull here other than just the way that like turning it into a GameStop style, just buy it because people are talking about it mode? Maybe just if I felt the real need to trade it using, what is this, 58.48, and then the low was 58.57. So yeah, right around 58.5 as either a stop if bullish or a potential entry if bearish. If we start to get that weakness, we may start to see a little bit of a down the elevator move towards 53.5 or even 51.60, kind of getting into this, these small areas of lows and highs. A lot of the volume was built down here at 50. On the day we went up to 51.25, that's a long ways down. But if we start to get below 58.5, I start to get concerned that we're going to have some weakness here. The implied volatility is high for no earnings, but the realized volatility is high, even though that's incorporated earnings. If I go longer term realized volatility, it's still 60%, and we're only pricing in 55. So it's a justified higher implied volatility because the market is not 100% confident in just buying and not looking at it. So people want to buy calls to define that risk and get that leverage if we do continue to explode. Tons of volume here on these calls already for PLTR, about half the open interest on the 50, 64s and 65s, full open interest on the 63s. Put side, probably just buying in some puts here as a way to define the risk for this week. But those will just, if we keep going higher, those will just keep getting less and less relevant, and people will probably keep a low dollar bid in there just to cover their butts in case we do collapse. I don't have a good strong opinion on the upside here. I mean, I could set a stop to say get long if we make a new high, and then just stay long until maybe below today's open. If we get into the red, that's a red flag. Get short below below yesterday's low. So if I wanted to tighten up the risk, maybe use today's opening level as a stop, and then yesterday's low as an entry on the short. And just watch that option flow. Right now, they're still buying calls. If they flip to starting to sell calls, that could be one of our signals that the top is in and that RSI is going to start coming down. While they're buying puts, I don't think of that as necessarily bearish. That is a way to just define the downside risk if you're long the stock. Once they start selling calls, it tells me that people are not seeing the upside anymore. So if I start seeing big prints on call sellers, and again, I'm not seeing that yet, that could be a good sign for the end of this particular move. Marathon unchanged now, so Bitcoin is actually firming again here, pushing towards highs. That allowed us Marathon to stay up. It was originally weak on earnings. It bounced back just off of the fact that Bitcoin is firm. Riot kind of hanging out here in the same level. Let's see what Coinbase looks like. I haven't looked at them yet today. Their firm MSTR has been one of the big leaders, and they're getting another $20 today. So MSTR is another one, kind of like PLTR, where it's just difficult to jump on this wagon. Looking for something else in the sector, like a Marathon or Riot or maybe BTDR, although they have earnings next week, as some of the catch up in names that are maybe a little bit more susceptible to dips in Bitcoin prices, but they haven't had the same leveraged return that we've seen in MSTR and Coinbase already. So let's do the power trader ideas here. Delta. I think Vlad's already long Delta, and just holding that one is looking like the right play to me. Again, breaking out now. I prefer to buy these names near the close when they dip a little bit. If we get 2 or 3% in Delta today, then the move may already be done, and I'd be booking profits if I had bought this morning. But I don't like to buy these names on the open, just not the style that I've kind of gone with on these. So for me, unless this dips back down towards unchanged, it's probably a pass. And if it gets up too high and then dips back to unchanged, it is definitely a pass. MasterCard may need to bounce. So if MasterCard can bounce back up above 527 or so, so get down to maybe a 0.25% down instead of a full percent, full standard deviation down. That looks like a good potential entry. It tells me that the people were there to buy this dip. If not, and it just keeps falling, then that's a stay away for today. Norfolk Southern, that's an okay one with the defined risk, as I see here. So really the low of November 6th, 266.36 gives a really tight stop for the long here. So far, so I think I like NSC the best. It's relatively unchanged. I can use the November 6th low as the stop out. And then I've got that potential leverage if the money flow comes back into Norfolk Southern. It's a little bit expensive and not the most liquid name. Only a few contracts have traded today. So I would have to work it with the options, but either the December 260 or 270 calls. Usually I like in the money, but that gets a little pricey. If I would need to really reduce the expense, I could go for like a 270, 280 call spread because the previous high is 277. So pressing against that, these 270s would make a little bit of money. The 260s would make a little bit more just because they're a higher delta and have a little bit more in the money intrinsic value. But the 270s would certainly start to make money if we can retest the highs. So I don't mind this trade though if I can get the execution. The liquidity can be a concern with dollar-wide markets, of course. Peloton. God, I have not looked at Peloton in a long time. I did not realize even we were in this bull run here. What a nice vertical for it. So you can just see the trend line here. Let's just draw it in. I'm a little bit too, yeah, we'll just use off of here where it started going really parabolic. So, I mean, really today's low is the bottom part of the trend line. If we continue firm today, stay basically anything above today's range, it still looks pretty good. How are the options being priced right now? Relatively appropriately. 8 calls for $1.35. Let's see here. The concern would be that the downside could be down towards like $7 if we start to see profit takers and or actual sellers and aggressive shorts looking to sell this thing. But we've had a nice run for long enough here that maybe the market confidence can start to recover. Delete that. Over 1 year highs, 2 years, we start getting back towards 15, 5 years. You know, this was a big stock back at the beginning of COVID. So, yeah, I actually like Peloton here. As long as we stay above today's low, that could be a good entry near the end of the day. And then ultimately SPY, of course. As long as we basically chill here, this seems fine to start to nibble a little bit into the broad market. Again, we need to press through those previous highs, but I think that the setups for Peloton and Norfolk Southern may be a little bit better than just broad market buying. So those do have some interest to me. And now let's do the earnings for this afternoon. There's only one I care about, and it's Cisco. Cisco expected to move around 5%, normally moves around 4 to 5%. We have had an outlier of 10% back in November, but 5% is, call it, $3. That would put us around 55 to 56, 55, 55 and a half. And it looks like there should be some support here just above 55. On the upside, we'd be looking at like 61 and a half. The previous high here is 59 and a half. So it would be making new highs here. We go out a couple of years. 64, 14 was the previous high in 2021. That might be a bit of a magnet up to 64. You can see big open interest here at 63 for the bull case. For the downside, the open interest is definitely focused on the puts at the 55 strike. So looking at like a 55 and then giving a little bit more room to the upside, maybe up to 63 on a double fly could be interesting with like $2 wide spread. So like a 57, 55, 53 put fly, that's going to run about 35 cents. Then a 61, 63, 65 call fly, that's going to run about, that's about even. That's about 17 cents. Let me double check my numbers here. 104, 86, this is 16. Yeah, so like 30 cents on the downside, but only 15 on the upside because it's going a little further away. So about 50 cents for the double fly, and that could certainly double if we hit one of those price targets and the open interest creates the magnet. It seems more likely than not that the downside would be the higher probability based upon the open interest. But the upside, leaving it a little bit more room by going up to 63, I think makes some sense, with 64 being the ultimate target on the previous high. All right. But for this week, 63 could be in order with the open interest there. Disney in the morning, $100 stock, normally moves 7%, so $7. $7 puts us down to 93 and a half right here. You can see some potential for support in that range. $7 in the upside is 107 and a half. Let's go out a year so we can get a little bit more room here on the chart. So really, like when I look at the May 7th high, it's 107.88. That seems like the natural target on the upside might be this previous high. When I look at the options market, 105 is the big open interest. That seems a little bit too passive for a normal earnings move. So I'm looking at the downside. The 95 strike and the 90 strike are two big ones. If we're looking for 93, maybe 94, then maybe I end up just betting on 95 instead because of the bigger open interest there. So it's about $6, and then I'd be looking at 107 or 108 on the call side. And there's not a big magnet there. So I have to be a little bit wary of that for the upside. Cisco looks a little bit better than Disney just from an open interest standpoint. So just something to keep an eye on, though. I think 108 does have a natural price point to a certain extent, but I don't see the options market giving it a lot of credence. Really seems focused on this 105 line, which is natural that they like the round numbers 100, 105, 110. And I'm looking more at 108. Might still play it today, though, because if I can do the 108 versus that 95, that's $6 down, $7 up. That could be in it, or even go down to 94 and do $7 each way. Then that could give me decent leverage. Okay. JD normally moves around 5 or 6%. The market is pricing in 8%. I think that's fair that the market pricing a little bit more given what we've moved off of the China news back in September, October. But let's just price it out for 5% to see if we can find a good technical level. 5% is $1.80. That would put us at 38. And 38 doesn't seem to have much anything to it. Really, maybe the 2 standard deviation move is in order here about 11%, because around 40, we're right in the middle of this range. I guess on the downside, that would mean we'd be looking for maybe as low as 32. The lows of the September 24th trade, maybe something in here in this 32 to 34 range could be a target on the downside. We got good open interest at 34, nothing much below. If I want to go for the double standard deviation move here, a name that's had such wild behavior already over the last couple months without any fundamental inputs on their own specific company, could get interesting. So maybe just targeting that 32 line, and then the 40 line is definitely a big open interest, big magnet there. So looking downside towards 32, upside towards 40. And again, just sticking about $2 wide. So like a 34, 32, 30 put fly is going to be pretty cheap. What are we, 60, 20, 26 cents. The call side would be 85, about 22 cents. So call it under 50 cents for the double fly, and then just looking for a 2 standard deviation move here. I think that could be interesting. So I like JD better than Disney from that setup, just because of how wild the move has been without the earnings part of it. How is that? Yeah. Let's go to AAP, Advanced Auto Parts, $40 stock, normal move, around 8%, currently pricing in 15%. So keep that in mind here. We are pricing in a bigger than expected move in Advanced Auto Parts. 8% is about 3.25, so that would put us to 38. And the real support looks closer to 36. The normal move on the upside would put us to about 45. And real resistance might be closer to 48. So like 36 is $5 down. 48 is pretty aggressive, but if there's an options open interest up there, not really. 45 would be the magnet on the call side, if anything. 35 on the put side would be the biggest one. 37 kind of targets it, but we're pricing in a $6 move on earnings. So I think this is probably more of a pass, just because we're looking for that move that I'm trying to predict. They're saying that there's already a higher probability of a 2 standard deviation move and just pricing in 2 standard deviations. Last one we got is Billy. Internet China. So another China internet one. Normally moves around 10%, just under, so $2. But this could be a bigger mover, I think, given that move that we've had, similar to JD. $2 would put us down towards 19. This low is around 19. I can see us going a little further here, down towards 18, the middle of that September 25th range, very similar to what I was looking at for JD. So if we go 18 on the downside and 24.5 on the upside, It's 3.25 either way, so I'd have to use 25 because of the open interest. I think makes more sense. You see that this market is also 15 cents wide. They like to price out the even dollar strikes more than the half dollar strikes, so just a market maker thing. Find the strikes that have liquidity. The 24 strike actually is wide too, strangely. But I'll look for the liquidity off of the 25s just to make sure I get my pricing right. 23, 25, 27 call fly. This would be worth a little bit more than the dime. It's probably worth closer to 13. But I'm looking at that for, what is it, 75, about a dime on the call side. And then for the 18 strike, it's the 20, 18, 16. And the 16, it's probably worth about 2 cents. So, it's 66. The 18s are kind of cheap here. Wow. More of the market is bidding up the call side more than the put side. Something. It just seems too cheap on the downside. This might be better suited with just a put spread instead of trying to create a put fly, since the 18-16 put spread that I'd be selling only gets me back about an extra dime. I think maybe I'd go for a 20-18 put spread for 50 cents rather than the put fly for 40 cents. Yeah, that just doesn't, or maybe even, this one's a little bit of a mystery to me, why it's so cheap on those puts with the potential. But I guess that it's just, people are saying that that's about the lowest we can go. So, yeah, I mean, I still think maybe going with the 2018 put spread, or even just an outright 19.5 put for about the same price. And then pairing that with a 23, 25, 27 call fly could be interesting in Billy. JD's going to give a little bit better liquidity, so maybe JD's the safer play in terms of actual execution on this. All right. All right. So that's what we have for earnings. It's what we got for some of the earnings plays here. Let's see what else we got moving today. We knew Spotify. Oh, yeah. I said I was going to check on the airlines. So you see JetBlue, they're reacting positively to what's going on with Spirit Airlines. That's a good sized move. So I don't necessarily want to chase that one. ULCC, Frontier, actually maybe an interesting buying opportunity, because if they're not the buyer of Spirit, then maybe they can just work off their own fundamentals and work on their own fundamentals. If we stay above the 11.11 high, which we need to get back above now as I'm talking, so about a nickel higher, I'd look to buy into this name, looking for a new high. The options are very illiquid, waste of time. Just the stock with a defined risk stop around 6.5 makes much more sense to me. So if I can get above today's high, Monday's high, I think go long. If we get back below yesterday's low, pitch the trade, because then it means that even with the news, we're weaker than the information in the market where there was still speculation about them buying Spirit Airlines. All right. For the bigger airlines, we already saw Delta firm. United looks good. American could be the actually interesting one outside of the signal generated, just because we are consolidating a little more near these levels and now just touching on the highs. So this is just setting up that initial breakout again. And if I compare this to Delta, which is clearly the leader, we are well above the levels from 6 months ago, $53, now 65. American relative to 6 months ago is still down. And I get individual companies, individual fundamentals, obviously. But if we are going to be just buying jets, American, United, Delta tend to get bucketed together, while Frontier, JetBlue tend to get bucketed together. So I think that there's a rationale for American or Love here, as Love tests their highs. Remember, they've got some new structural interest and everything else that could be going on that could impact their their fundamentals to make them a little bit more like United and Delta and American Airlines instead of their previous model. But that could mean that they follow that stock pattern as well then. So if that gets back above Monday's high in love, I think we're interesting there. American's interesting as it stands. And then we just kind of see if this can continue to firm here. So the airlines still look good to me as well. What else is moving this morning? I don't care about that stock. WJ. Japan getting hit a bit here. The FA still weak. So we have HD recovering now. So we were talking about that yesterday. I had bullish earnings and raised price targets, and it was bearish anyway. Here, used yesterday's low as a stop and get in order to get long. If the stock can consolidate for a day or two and then set up a new high above, today's or tomorrow's high and start to show some bullish trend, we're going to get some resistance around that 420 level. So it's a small distance before we hit resistance. But if we can push through that, it can create some nice upside as people start to get more aggressive with HD potentially. Given the open interest, there's a lot of people betting on 450 being a possible target in December. That seems pretty aggressive right now. I'd probably look at 4.25 as a much more realistic target. And then if we get above 420, I could start to restructure the trade, but looking at like a 410, 4.25 call spread for $5 and 5 and change. Maybe let's see the 660, 6.25, 5.25 at 660. So maybe 575 for that 410, 4.25 call spread. And as we approach 420, look to rotate maybe into a 420, 450 or a 425, 450 call spread. Or take the money if we stall at 420, right? If we can't push through 420, we're not going to get to 450, obviously. How's Lowe's look today? So Lowe's was pulled back a little bit on HD earnings. So same idea. Yesterday's low is a stop. If we get above, targeting 285. So that's basically the same exact thought process here. Like a 280, 290 call spread. There's no open interest really in Lowe's. It's a little less liquid, 20 cents wide on this $1.60 call, but HD is probably just going to give me better execution quality than Lowe's. So maybe disregard that one for now. FedEx. Yeah. This looks really strong today. So we had the nice run, the standard dip. We stayed just above yesterday's low. We're just below yesterday's high, 291.25, 291.27 technically, 290.64 right here. And then I think we'll start looking for maybe a small stall at 300, but ultimately 310. So this has got some definite upside here. We've got a month until earnings. I like FedEx here. And use the D13th expiration so that I'm both not paying the options premium for earnings, and I'm also forced to be out before earnings, so I don't play this through earnings. But the D13th expiration call spreads could be interesting from like 295, 310 for. Yeah, let's see. That's about probably close to 180. That's 5.25, so 340 for a $15 wide call spread. That looks actually interesting. I'm going to write that one down. I may do that today. Later in the day, as long as FedEx stays here near the highs, 280, 295, 310 on D13th. All right. So I kind of like the FedEx name here. It was on our list on Aggressive Power Trader, I believe, a couple of days ago, wasn't it? Maybe not. Maybe it was a weekly Power Trader idea at some point. Oh, no, there it is. Yeah, it was yesterday. FedEx is on the list. So recovered from yesterday's dip and now looking potentially better today. So given the move today and the long bias yesterday, if we had fallen today, it would have been washed out. But now that we're getting the bounce back, it looks pretty good. Yesterday's other ones that we had were Fortinet. That's consolidating here at the highs. So kind of rounding out the top. Not necessarily looking bearish, but looking for that RSI to drop off of 85. JP Morgan. Yeah, still looking firm here on the open. I like that. SRE looks a little better than Fortinet. Very similar chart to Fortinet, but making the new high today. And Williams Companies. Yeah, kind of hanging out very similar to Fortinet and SRE on the formation. Needs to see a little bit more buying to push that new high, but with the RSI at 78, it's natural to get a couple of days of consolidation, bring down the RSI, and then set up for that next leg higher. So I think that's how we're looking at some of these names right now, is those names that have already run, looking for a little bit of consolidation before the next leg. Let's look back to NSC. Yeah, still hanging in there okay. So we'll watch those throughout the day and maybe look at a Peloton December 8 call later in the day. Or an NSC if the liquidity improves enough that I can get in there. That could be interesting. And looking at FedEx. And is SAFE still halted? No, not halted anymore. Really very minimal bounce back from that 120 level. I think it's more interesting to watch JetBlue and ULCC than SAFE here. And ULCC is back above the Monday highs. So this is setting up for new highs. Oh, and for Bob, if you're watching the replay, I don't think you're on this morning. Let's take a look at your ALGT. That looks really good too. I mean, above the previous highs. I mean, almost all of the airlines except for SAVE look good right now. Just to be blunt with it. I mean, all the airlines seem to be performing well. What is that doing for Boeing? Nothing good. Wow. Eek on Boeing. Other industrials, Caterpillar, eek. Gapped up on the election and just gave it all up. Still weak in LMT. Raytheon holding up okay. I still thought those would have done better off of the earnings announcement, but the one that really didn't do it, or not earnings, an election announcement, the one really not doing well in the election was Donald Trump media. As this implied volatility falls, and it will, because we're getting into a much more behaved performance here as long as we stay in this range, and then implied volatility falls down towards maybe even 125%. Maybe there is a trade here off of expected movement, get a little bit more consolidation here, and then looking for it to break below 26.65 or back above 35. I don't think people are really looking for that $100 stock price anymore by any means, though. You can see the open interest on the 115s still there, but these have dropped significantly since the election. $10, $9 a contract, and now sitting in the 70-cent range. Just see that that buyer hoping for a GameStop type move did not get that off of the election. $16 down to $1.50. So that's the danger of trading for that crazy GameStop parabolic move. Speaking of GameStop, by the way, this actually looks decent here, which causes me a little bit of concern for the market. When GameStop starts being one of the better ideas out there for the retail sector, that can be a red flag. XRT has been pretty good, and GameStop is actually one of the biggest holdings now of XRT because they do an equal weighted portfolio in XRT. And I think GameStop is now number one holding for XRT as a result of that move that we've had so far, crazy as it may seem. And Macy's not doing anything. Restoration Hardware drifting lower. How's like Costco look? Setting up a bull flag. Walmart just grinding up the highs. So we're getting an ascending triangle here. We got support rising. The resistance is clear right at 85.5. If we push through that, that may set up the next leg higher. We do have earnings next week to keep in mind. So with earnings next week, maybe tough to trade into into Walmart now, but it broadly looks pretty good here. Target also looks decent for a 162 price target as a short-term move. Walgreens just drifting lower. CVS. Yeah, not much there. Every time we make a new low, it makes it, it just sets up more for maybe an outright put. So, yeah, I think overall right now, the best stuff I'm seeing, maybe FedEx, Peloton, and then some of those NSC, and then some of those earnings plays. And then, of course, any airline seems to be a decent option, with ULCC being the best defined risk since we are closest to the stop out level, and Delta being the overall leader, with just general bullish flow continuing over and over. All right. And I did say I would take a look at Tesla, and somebody's trading some Tesla calls right now, so we'll take a quick look there. As long as we stay above this 3.25 level, I think the bull is still holding some control, but we're getting a little bit of profit taking. Brings down the RSI to 71, a much more manageable level. And then maybe the next leg higher can come in the coming days. So I want to see us stay above yesterday's low to justify that. Maybe set up a bull flag for a move to 360 or higher. I'd also really love to see this implied volatility drop towards 50%, currently 59. And as we see sellers of calls, those traded on the offer, but it may have been a seller given the drop in implied volatility. More likely it was somebody taking profits on that big open interest, and then potentially 50, 360 range again. So things to watch. Plenty of stuff out there. A lot of smaller moves though than what we saw last week, I think. And that's what we got to be prepared for, is smaller moves that maybe take more time. All right. All right, folks, with that, I will let you all go. I hope you have a wonderful trading day. I believe Vlad will be on here today for the close. I'll be on for the closing bell tomorrow, Thursday, and we can talk through how some of these earnings played out, Cisco, JD, et cetera, and see if any of them hit the right way for a potential interesting double butterfly. So thanks again, everybody. Hope you have a good one.